Which is called Zscaler. And has anyone ever heard of it? Okay, perfect. So this company, it IPO'd probably 4 months ago. So it's pretty new stock. Definitely not a household name, but I just want to give you a rundown and wanting to see your guys' thoughts. As like a preface, I'm really into technology, and so a lot of the companies I'm looking after are really tech-based, so I've been heard in the last couple days. But anyway, so the company Zscaler, based out of San Francisco, just like every other software company, is founded in 2007, and they are a software as a service company. If you guys don't know, like SaaS, so it's basically distribution through the cloud. So Google Docs, Google Sheets, like you don't have to actually download anything on your hardware, on your computer. It's just through the internet. That's the distribution system. And it's pretty revolutionary, but that's just kind of the distribution system. And it's attacking a big market, the cybersecurity market actually. And the thing about the cybersecurity market is that it's very fragmented. Like you'll see all sorts of names, and you're like, I can't really get my head around this industry. Like if you're talking about retail, e-commerce, you can, like Amazon is a real like 800-pound gorilla in the space. If you're talking about like industrials or like that sort of thing, there's like some big players. But cybersecurity, it's really hard to get your mind around. But there's a big tailwind. So this industry is growing about 11% per year, and it will be until 2023. And so there's kind of this tailwind. So like generally, I think everybody knows that cybersecurity is going to get more important, but we just don't know who the winner is going to be. And so like I think Zscaler is actually a front runner, and I will talk about that for the rest. So I just want to give a brief background of what they actually do. I'm not going to get super into the nitty-gritty of the details because I think that would just bore you. But basically, the typical way that cybersecurity has functioned is you have a data center and you kind of set up a network of security appliances around it. And hackers are trying to get in, and once they do get in, you can't really detect them once they're on the inside. But now, with everything moving to the cloud, people are still setting up this network. And so let's say you're an employee for Apple, you're an employee for Google, and you want to sign on to all your company's applications. You have to log in through a VPN to get onto the network, and then you can go onto your applications. Welcome, man. And what this does, this kind of what they call hub and spoke infrastructure, is it creates a slowdown. And what Zscaler is doing is kind of bypassing that whole network. So instead of being able to sign onto the network, you just sign on to Zscaler, and it basically just shoots you right to the applications. So kind of, I'll give a little visual of how to think about that in a little bit, but like I was saying, you don't have to sign on to a network. It actually makes it more secure. It's this thing called zero trust security. So it's kind of this concept of don't trust but verify. And it's really interesting. So they can kind of use data points from your location and like when's the last time you signed on, like all these administrative things to like, let's say Kevin works for Schwab and he wants to log on to the company's applications, but he's in like Hong Kong, and they didn't know that he was in Hong Kong. Based on his location, if he signs onto the Zscaler app, it'll like come back to him and be like, oh, you're not actually where you should be based on like all our protocols. Like you're probably, we shouldn't let you on the network. Kind of this thing. It's kind of cybersecurity at a whole new level. And so I want a little graphic of kind of what it does. So there's you, and there's Google. You're trying to sign on. But we have some hackers, and Zscaler is that tunnel. They want to let you just get straight onto the applications rather than circumventing that with kind of like all these network appliances. So that's a lot of techie stuff, kind of, but what you basically need to know is that it increases security, increases mobility. So kind of like I was saying, Kevin's in Hong Kong, and they know he's in Hong Kong. They don't have to do anything. Like it's basically secure as is. How's it going, man? And so it increases speed and decreases cost and complexity. So like all of these things are good things, and kind of the value proposition that is at the core of Zscaler's technology. So I just want to go through the business model. So they sell software through the cloud, and so pretty much all the software is subscription-based, meaning it's recurring. So the thing about software businesses is that you have a high level of visibility into your revenue. So you kind of know all your customers. If it's at the core of their business and it's actually working, they're probably not going to just like shove your software off to the side. Like you're probably just going to keep using it. So there's this like high switching costs, which allows you to just keep coming back and keep cashing in, which is like a really interesting thing about software. And a lot of these software companies have professional services, which are very low margin, and so Zscaler kind of outsources that, and bread and butter is really just this software. And moving on, so a big part of kind of how I look at investing is like a lot of the competition. And so Zscaler is really at the forefront of cybersecurity right now. If you see, this is just a report by Forrester's, you kind of see them at the top, and you see like Blue Coat down there and all these other names. Even Cisco, which is a huge behemoth in this space, is way down there. So Zscaler, even though it's much smaller, their technology and where they are right now is really good. And I want to talk about this because Symantec, they actually bought Blue Coat that was in that last slide. And so now this is the Gartner report, which is like, Gartner is kind of this publication that really gives like the latest up-to-date things in tech. And so you kind of see Zscaler and Symantec are like way out in front. And I just want to talk about that. So Symantec bought Blue Coat in that slides a couple slides ago for $4.6 billion, and that was 2 years ago. And so you saw Symantec and Zscaler, just them two, way out in front of everybody else. And in Symantec's last earnings call, their sales were actually decreasing, and Zscaler's were actually increasing. So just from kind of like a big picture view, it really looks like Zscaler is like the leader out in front. And that's one big criteria that I'm looking for, is like just leaders in the space, because I think just the rich get richer. As soon as these big companies are doing really well, that's more customer reviews, and that just means more IT professionals use it, so they know the software, and so it just becomes kind of this virtuous network effect. And I just want to talk about the moat of the company. Moat, if you guys have ever heard about it, is kind of like competitive advantage. Why is this company better than another company? And so Zscaler, the name actually comes from the ability to scale on 3 axes. So you see here, kind of the number of employees protected is the diagonal one. Global, the protection, is the bottom. And then higher is kind of like the number of applications. And so basically it can just scale infinitely, because you don't have to download it on everybody's hardware. That's where the cloud is really important. And I just want to talk a little bit more about the moat. So since Zscaler from the very beginning was cloud-based, that means they didn't have to cannibalize any of their legacy subscription or legacy revenue. So what that means is, like Cisco, a big player who used to do cybersecurity with these network appliances, so actually physical hardware that was protecting their network, if they wanted to create cloud-based technology, they could, and they do right now, but the thing is, as the cloud base is growing, they have this even bigger base of on-premise revenue, and so as this grows, this decreases. So their company looks like they're actually doing really poorly, and so it's called cannibalization, and in that weird process, the company stock price is sure to plummet. And so the thing, there's all these dynamics, because the CEOs, the CFOs, they might only have like 5 years until they're retiring. So are they going to like risk their retirement for like this weird period? And so like it's kind of this innovator's dilemma. These big behemoth companies are susceptible to like upstarts, kind of like Zscaler. There's actually this guy called Clayton Christensen, who's from Harvard, who does like a big study about all these innovator dilemmas. And Zscaler had like a 9-year head start for this cloud from the ground up. And so that's a big advantage, and the dividends are really starting to pay right now. Another thing is that since it's cloud-based, all of the data runs through Zscaler. So think about, like, if you are installing Word, you install it on your hardware, and basically Microsoft doesn't have any insight into that because it's on your hardware, it can't see into that. Versus, which is kind of weird, on the other hand, like Google Docs, that's through the internet. Like, theoretically, they could see everything that you're typing in Google Docs because it's through the internet. And Zscaler, it's the same way. Like, in cyber technology, if you're running all of these applications through Zscaler's technology, they see all of this, and they can, like, if you have a blockage on your end, since it's through the cloud, it's blocked, and then, like, over here, it's blocked as well. You don't, because there's like this, there's more information, so it's more important, basically. And then I'll talk a little bit about management, but the CEO is really reputable. So just everything up until this point has been really good, and just the competitive position, the moat. I've been really happy with Zscaler, and it really backs up in the numbers. So when I'm investing, I'm very like numbers based. So if I'm looking through all the revenue, earnings, everything, I'm looking for like a trend in the right direction, and Zscaler, like everything is going in the right direction. So this is billings growth. So billings is revenue plus deferred revenue, which basically is like a very whole number for your customer demand. So just think of it as like how much do your customers want your product. And so you see these numbers in 2018, you kind of saw acceleration from Q2, like 49% to 73%. So that's like a huge acceleration. Usually these companies are decelerating the revenue, but on the other hand, if you ever see like an acceleration in revenue, you need to like pay attention, because it seems like something is going on. What is it? And so like what I was talking about, kind of like this 9-year head start, everything's starting to pay off the dividends right now in terms of like just all these things. So I want to talk about a few metrics. So net losses, they're actually not like positive in earnings, but a lot of these technology, I could talk about this all day, but a lot of these technology companies look like they're losing money right now, but it's actually because a couple weird accounting things. So they have to spend a lot of money on stock-based compensation for software engineers, and so that kind of messes up, like looks like they're spending a ton on sales and marketing and a ton on research development, when actually the cash isn't going out yet. And the important thing is that if customer demand is still there, they're going to try to upsell and all these things, which I'll talk about later. So it looks like they're losing money, but the net loss is getting much smaller. So if you see right here, it went from negative 20% to negative 4%, which is like a huge increase. So it's getting way better really fast. And then cash flow, it actually jumped positive here. So this is a huge free cash flow margin for one quarter, 21%. So that means every dollar of revenue you bring in, 21 cents of that is free cash flow, like free cash in the bank, which is really good for this early stage technology company. So just like this is kind of a summary of what I was talking about: accelerating revenue, accelerating businesses. So the customer demand is there, and then one point is gross margin's really high. So what a gross margin is, every dollar of revenue, you make 80 cents of gross profit. So think about it this way: if you started like a shoe company and you like created all these shoes, your cost of goods sold, how much it actually takes for you to make the shoes, is that subtracted from the revenue. So let's say you sell a pair of shoes for $100, but it takes you $80 to make the shoes. Your gross profit is only $20. So that means your gross margin would be 20%. However, these gross margins are 80%. Like, that's a really high number, which allows you more potential for profitability. I guess I could say that. And so losses are narrowing, free cash flow is really growing. So everything's trending in the right direction. And so when I kind of think about investing, I think about it in like two different ways. One is the narrative of the company, and the other is the financials. So the narrative is the competitive positioning is really good. All these things, the technology, super good. But if the financials don't back that up, then it's not as reputable. So you're looking for both of those things. I've just found that kind of mental model really helpful. And so I want to talk a little bit about the management of the company. So the CEO, his name is Jay Chaudhry, and he's actually founded 4 companies before Zscaler. So he's like a serial entrepreneur. And interestingly, he sold all 4 of those. So the dude is like really rich. He's already a billionaire. He doesn't need Zscaler, but he's just passionate about technology, and like that's a really good sign from me. Like he's not just doing it for the money, he's just gonna cash out. I think Zscaler is like his baby, and he's gonna like carry it for a long way. And it's actually interesting. So on like looking through all the financial documents, it looks like his stake in the company is 22%. But if you read through the footnotes, there's another guy who owns another 30%. But if you read through in the footnotes, it says that this other guy is part of Jay Chaudhry's trust. So it's kind of like a sketchy thing. I think they didn't want people to realize that he actually owned over 50% of the company, which some investors kind of get like a little scared of that because there's so much power of this guy. But if you trust him, I think it's all the better. Like if his net worth is so tied up in this, I'm fine going along as an investor. And then kind of moving on. So this is kind of like the big but of the investment. The valuation, like all of these things are incredible, like technology, competitive position, moat, financials, management, all these things check the boxes, right? But that means that the valuation is premium. Like this is an expensive company. I'm not going to even say, like, I'm not even going to like BS you that it's not. It's expensive, but I just want to like give you my reasoning of how I view expensive companies. So the market cap is $4 billion, and it made less than 200 million in sales. So it's like trading for about 20 times sales, which people think 20 times earnings is sometimes expensive. So like this is like, I'll just play that. It's like a nosebleed valuation. And here's the thing. Analysts in the industry always are looking forward. What kind of gets me like a little upset is that a lot of people, when they value a company, they're always looking backwards. It's always the trailing 12 months PE ratio. It's all these things, looking for cheap stocks, right? Because that's what Warren Buffett does. That's what we've been kind of like programmed to think. And I kind of like look at it a little bit differently. So the company's actually trading for $3.7 billion in enterprise value, and what that means is it's just the market cap subtracted by the amount of cash it has. So it has about 300 million in cash, and so analysts are always kind of looking at this number rather than the market cap. And then they're always looking at forward sales, and so I think there's a good chance that revenue growth can be about 50%. So on this kind of like this forward enterprise to sales ratio, it's much lower than that 20 times sales. So I think it's in that context, it's a little bit cheaper, but it's not cheap. But what I think one thing that's really interesting is that, remember how I was talking about Blue Coat being bought 2 years ago for $4.6 billion? Zscaler is way ahead of Blue Coat right now. Like Symantec, their stock is falling because the sales were decreasing. So Zscaler is ahead, right? I think of it kind of as a backstop. I think this is a really interesting concept to think of like a floor of your company. So, and how I think about that is like what it could get bought out for. So that kind of like establishes a floor. If Blue Coat got bought out by by a big company for $4.6 billion, and Zscaler is at $3.7 billion, I think if Cisco wanted to really like increase their presence in this space, they could just buy Zscaler, and they would likely be for more than 4.6. So if you think about it in that way, it could get crushed in the short term, but like long term, it's not likely that you're going to lose like a huge part of your investment because it's so valuable. So I think that's just kind of like an interesting concept. And I just want to talk about a few risks, because no investment is without risks. It's just you have to be aware of them, and you have to be aware of how the market is valuing those risks. And so I just want to go through 3. So cyber attack, of course. Like if there was a cyber attack and it like penetrated Zscaler's impenetrable kind of like network, I think there would be like bedlam. But because I also think that a lot of companies have recovered from that. But I would think it would just be interesting to even see, like, I don't think anything's 100% bulletproof. That's basically what I'm trying to say. That kind of like goes to the second point, disruption. There could be an upstart, but I just don't see an upstart taking over Zscaler, which is the leader in the market right now. The real main risk, I think, is the valuation. Like, I do believe there's too high of a price to pay for like a really good stock. Like at some point, valuation has to play some part. But here's the other thing about valuation. Investors all have different time horizons, whether they like to admit it or not. So traders, their time horizon might be 2 days versus yours might be like 10 years. You're a long-term investor, buy and hold Warren Buffett style. Like there's all these differing, contrasting time horizons. And what that does, somebody could say, Zscaler is like the most overvalued stock ever. Like I would never buy that. But if you're holding it for like 10 years, you're monitoring it, like let's say in 10 years, they're doing like $4 billion in revenue. That means it's one-time sales. So it's for sure going to be higher. Like you're not going to break even. That's kind of what I'm saying. So depending on your time horizon, I think that is how much you could be willing to pay up for a company. If that makes sense. We can I would love to answer any questions if you guys have anything afterwards. Just like shoot anything that you didn't understand. I just love talking about this stuff. So please shoot it's not even like, oh, you don't know what this is. It's just like, no, we're all learning, and like I'm learning a ton still. And so I just want to end kind of with a brief rundown of the company. So it's a big lead in cyber tech, and it's a software company, really high gross margins, all these great financials. But the one thing is the valuation. But personally, I think there's that backstop of the $4.6 billion. And I have a long-term, long time horizon, so I'd be willing to invest in this company at this price. I would be interested to hear your guys' thoughts, but before I do kind of like a Q&A, I just want to give like a quick plug.